This is an overview of the Homestead Credit Program. This review will cover changes in the program, qualifications for the credit, areas where we have the most errors, and topics for which we receive the most questions. Determining if your client qualifies for the Homestead Credit is an important time-saving step. If your client does not qualify, then there's no reason to complete the form. Some additional qualifications were introduced for Homestead Credit claims for tax year 2017 and thereafter. If your client answers no to any of these questions, your client does not qualify for the Homestead Credit. Is your client age 18 or older as of December 31st of the claim year? Is one or more of the following conditions true for your client for tax year 2017 or thereafter? 1. Are they age 62 or older? 2. If they are under age 62, do they have earned income during the year? Now, earned income is the sum of all wages, salaries, tips, or other employee compensation, and net earnings from self-employment. 3. If they are under age 62 and do not have earned income, are they considered disabled? If so, do they have the required verification from a physician statement, a veteran statement, or a Social Security document? In addition to the new requirements for tax years 2017 and forward, which we just covered, the previous Homestead Credit requirements still apply. And if your client answers no to any of these questions, they are not eligible for the Homestead Credit in that tax year. Was your client a resident of Wisconsin for the entire year? This means a legal resident here from January 1st to December 31st. In addition, the claimant may be residing in Wisconsin temporarily, such as an out-of-state student who resides in Wisconsin to attend college but plans to move back to their state of residency upon graduation. Is your client's household income less than $24,680? Remember, household income is not the same as taxable income. It includes both taxable and non-taxable income items. And did your client own or rent the Wisconsin property they lived in during the year? Again, if your client answers no to any of these questions, they don't qualify for the Homestead Credit. Now, if your client answers yes to any of these questions, your client also does not qualify for the Homestead Credit. Was your client claimed by another taxpayer as a dependent? There is an exception to this rule. If they are over age 62, then they will still qualify. Did your client live in tax-exempt property? This does not include a housing authority that makes payments under Section 62.1201 of the Wisconsin statutes, but refers to other tax-exempt properties such as dorms, prisons, or church property. Is your client filing on behalf of a person who is deceased? A claimant must be alive at the time of filing to qualify for the Homestead Credit. And has someone else in your client's household already filed a Homestead Credit claim for this year? Household is defined as a claimant and the claimant's spouse living in the claimant's homestead. If the claimant is single, they are a household, whether they live alone or with others. If the claimant is married, they and their spouse are a household if they live together. And if the claimant is married, but they and their spouse maintain separate homes as the end of the year, they are considered a separate household. Some more questions. Are you claiming the Veterans and Surviving Spouse Credit or the Farmland Preservation Credit based on current year-end property taxes payable in the following year for your client? Taxpayers can only receive one of these refundable credits. For all 12 months of the year, did your client receive Wisconsin Works W-2 payments of any amount or county relief payments of $400 or more? Receiving either of these benefits for 12 months of the year disqualifies your client. Does your client reside in a nursing home and receive Title 19 medical assistance? Also note that just because your client qualifies for the credit, that does not mean that they will actually receive the credit. The credit takes both household income and the amount of rent or property taxes into consideration in the calculation of this credit. Next, we'll touch on upcoming changes to the Homestead Credit Program. Starting in tax year 2018, household income will require add-backs for certain disqualified losses. Now, disqualified losses are net losses from sole proprietorships, net capital losses, net losses from sales of business property, net losses from real estate, partnerships, tax option S-corps, trusts, estates, or net farm loss. There's an exception for a claimant who's a farmer when the farming activities generate less than $250,000 of gross receipts. You can get more information on the homestead credit limit by searching for Wisconsin Tax Bulletin 199 on our website. Once you determine your client qualifies for the homestead credit, you must determine which schedule to file, either the Schedule H or the Schedule HEZ. If you use software to prepare your schedule, the software may only support the Schedule H. We encourage taxpayers to file using Schedule H if they can, as this schedule includes a listing of most non-taxable household income. This helps prevent non-taxable items from being overlooked. For a listing of the specific criteria that allows you to file on a Schedule HEZ, refer to page 5 in the Homestead Credit Instructions. Find it by going to DOR Forms, then locate the instructions in the individual link under the applicable tax year. If you do not meet certain criteria required to file using Schedule HEZ, you must file using Schedule H. Well, now that we've covered how to determine if your client qualifies for the homestead credit and which form to use, we'll move on to a review of one of the key documents needed to claim the credit, and that's the rent certificate. Check your client's rent certificate for the following. 1. The renter claimant section has all of the information filled in and contains the dates of actual occupancy. This should be done for each rented property if there's more than one. 2. If the landlord refused to sign the rent certificate, the box under the claimant section should be checked. Verification of rent paid should be submitted with the return. Check to see that the landlord or authorized representative section has all line items answered. Look at lines 4B and 4C. Line 4C should only have entries if the amount of rent paid changed during the rental period. Otherwise, line 4C should be blank and the monthly rent should be entered on line 4B. Look for an original signature of the landlord or authorized representative, and also make sure their printed name is entered in the signature box area. And note that a management company's name is not an acceptable signature. If there are 2 or more occupants indicated on line 5 and your client's rent certificate reports more than an equal share of the rent on line 6, make sure the shared living expense schedule is filled out. When reviewing the shared living expense schedule, make sure the other occupants' names are listed on the lines provided. In addition, make sure the entire chart of shared living expenses is completed. Incomplete schedules will not be accepted, and the department will only allow an equal portion of rent for the calculation of the homestead credit. Once you've checked over the rent certificate for completion, make sure it's not a voided rent certificate. Alterations, crossouts, even if done by the landlord, erasers, and whiteouts all void a rent certificate. Additionally, a rent certificate signed by the claimant as authorized representative is void. This is true even when the claimant works for the management company that owns the rental property. A new rent certificate should be completed and signed by the landlord or authorized representative. Invalid rent certificates will not be allowed in the calculation of the homestead credit. What should you do if your client cannot obtain a signed rent certificate? Well, first, check to see if your client has filled out the information on the rent certificate and the landlord refused to sign box is checked. Second, check to see that your client has verification of rent paid for the year. Acceptable verification includes canceled checks or copies of complete money order receipts. Verification must be submitted with return for any rent to be allowed in the calculation of the homestead credit. If your client would like the documents back, please attach a note to the return stating so. The homestead credit is now complete. If you use homestead credit software and will be e-filing this return for your client, the last thing you need to do is mail your Form WRA or Wisconsin required attachments or submit them electronically. As a reminder, the Form WRA is only required when an electronic return form is filed, and these documents are not attached directly to the electronic returns. Please do not file Form WRA when you file a return by paper. We've made it easy for you to submit required attachments electronically using My Tax Account. We encourage you to use My Tax Account instead of mailing them. Go to our website and click on the My Tax Account icon or go to tap.revenue.wi.gov. Select the Quick Links tab and then select Submit Required Attachments WRA and follow the instructions to submit the required attachments electronically. The following are all required documents to be submitted with the WRA. All income informational returns such as Forms W-2, 1099-R, 1098-T, and W-2G. A description of earned income if your client is under age 62, not disabled, and has earned income, but no income tax return, Schedule C or Schedule F was filed. Property tax bills or rent certificates. Verification of disability if your client is under age 62, disabled, and does not have earned income. And finally, any schedules, documents, notes, or explanations that are required. Here are 4 examples of required documents, notes, or explanation. Example 1, a copy of a deed, closing statement, or settlement statement to verify ownership of a property. Example 2, a note explaining how rent was paid when income was lower than the rent. Example 3, an attachment showing how household income was calculated when a taxpayer was married or divorced in a year. And example 4, Schedule GL if the claimant sold their principal residence during the year. The following are not required to be submitted, but are often very helpful. Statements showing the 12-month benefits received from Social Security, Federal SSI, SSD, as well as Wisconsin SSI, SSIE, and caretaker supplemental payments. While these statements are not required when a return is filed, the department may request these statements at a later date to verify items reported on the return. At this point, you've completed a Homestead Credit claim and submitted your Form WRA, so you're all set to go, right? Well, most claims will be processed and their refund issued shortly. Other times, errors are made whether a client or preparers forget to submit information. Here are some of the more common errors the Wisconsin Department of Revenue sees with Homestead Credit claims. The first type is preparation errors. Most of these errors occur when clients meet certain requirements, but the preparer is not aware of additional items they should be reporting or submitting with a return. For example, a client forgot to tell you that they received child support payments. They're supposed to be included in household income. Publication 127, Homestead Credit Situations and Solutions, is a valuable resource which lists common situations and required additional documentation or explanation when filing a homestead credit. For each situation, solutions are given that will help avoid having a letter sent to the claimant for additional information or have the claims adjusted. Find the publication on our website by searching with keywords Publication 127. Other times, an income tax return will claim a homestead credit, but a Schedule H will not be submitted. We cannot allow a credit without Schedule H or Schedule HEZ. Make sure the schedule is either submitted with the paper return or included in the electronic filing of the Wisconsin income tax return. This includes submitting a Schedule H as amended when filing an amended Wisconsin income tax return. A second common error encountered is a submission of a Form WRA with an income tax return or homestead credit claim filed by paper. Remember, the Form WRA's function is to attach paper documents to an electronically filed return. Thus, it should only be used when you filed electronically and are mailing in the required documents. Failure to use the WRA exclusively for its intended purposes is a primary cause of delays and department's oversights. Well, how do you avoid these problems? Only mail Form WRA and the attachments if you have successfully filed an electronic return and received an acceptance for that return. Do not use Form WRA to reply to a letter the department has sent your client, file an appeal, or file an amendment. If you must file by paper, have your client bring all attachments to you before you mail the paper return. Paper returns should include all required documents at the time of mailing. Incomplete paper returns submitted over 2 or more correspondences often result in return rejection and refund denial. The third type of error we see is missing required WRA attachments. Frequently, missed required attachments include Forms W-2, 1099-R, 1098-T, and W-2G. Proper rent certificates or correct property tax bills. Ownership is not verified when et al. Is on a tax bill. In this example, we would need a deed or other documents showing all of the owners. We would also need an explanation of what owners live at that property and who pays the taxes. Proper documentation not attached when a homestead is sold or purchased, and an explanation of how rent was paid with low income or no income is reported. Well, why is this a problem? In the majority of these cases, the department will have to write to your client to get the missing information, and this will cause a delay in your client getting their refund. We offer 2 key pieces of advice for this solution. 1, double check to make sure all necessary documents are paper clipped to the form when mailing it. Review page 17 of the Homestead Credit instructions for assembly instructions. If e-filing your return, make sure you have completed Form WRA and paper clipped all documents to it before mailing them, or submit them through My Tax Account. 2, if you're not sure a note or document needs to be sent, make a copy of it and send it. We only have the documents you submit when reviewing a claim. If something needs to be clarified with a note or document, please send it along. The fourth type of common error we see is missing household income. The top 8 income omissions are Wisconsin Works W-2 or kinship care payments, child support, maintenance payments, and other court-ordered money, Social Security benefits, federal and Wisconsin SSI, Wisconsin caretaker supplemental payments. And verification of Wisconsin SSI may be obtained from the Wisconsin Department of Health Services by calling 800-362-3002. Railroad retirement, pensions, and others. Pension and annuity payments, including veterans benefits and the $5,000 retirement income exclusions taken on line 11 using a Code 26 subtraction. Non-taxable deferred compensation or IRA, self-employed SEP, simple or qualified plan deduction taken on the federal return, non-taxable capital gains or excludable gain from sale of claimant's principal residence, all forms of depreciation from all sources such as from Schedules C, E, and F to partnerships, LLCs, and tax option S corporations, including business, car, and truck standard mileage, business use of home, and amortization. Why is this missing income a problem? If we have a question on the return, we may write to your client for more information, which could cause a delay in your client getting their refund. If additional income is found during the review, we will add it to the household income and adjust the return. If we adjust the return, your client will get a notice explaining why the refund is not the amount they expected. What is the solution? First, make sure to ask your clients about certain items that aren't covered by standard tax preparation interviews for all non-taxable income items. Also use Schedule H to fill out your claims, as this schedule has lines for all of the household income. Use these additional lines as reminders of items that need to be included in household income, even though they are non-taxable. The fifth type of common error is missing verification of property taxes or rent. The most common errors with property tax bills or rent certificates are: 1. The claimant moved during the year. Only one rent certificate is provided for part of the year, and the rent certificate for the remainder of the year is not submitted, and no further rent verification is submitted. The claim shows more rent than what is shown on the rent certificate provided. 2. More than one occupant is shown on the rent certificate. The claimant does not fill out the shared living expense schedule, and they claim 100% of the rent or greater than the equal portion of the rent. 3. The landlord will not sign the rent certificate, and no proof of rent paid is submitted with the claim. 4. Documentation in lieu of tax bill is sent. Periodically, something other than a tax bill, such as a tax payment receipt, is sent to verify the property taxes claimed. Alternative verification of the property taxes claim may be disallowed because it does not verify who owns the property, the acreage of the parcel, if any special assessments were levied, or other information which is found on the tax bill. These items must be shown in order to determine the allowable property taxes. For this year, only the tax bills should be sent. 5. The lottery and gaming credit is shown on the property tax bill, and there's no note attached to the claim indicating whether one will be taken or if they even qualify to take the credit. 6. The addresses on the tax bill and the claim are different, and there's no note attached explaining why. And 7, a possible partial business use of the home is indicated on the return, but a Schedule 2 is not completed showing a percentage of home used for personal purposes, and a Form 8829 is not attached with the return. Why is a missing property tax bill or rent certificate information a problem? The department may adjust your client's return and refund. If we adjust the return, your client will get a notice explaining why their refund is not the same amount they expected. When we cannot verify the amount of rent actually paid, we can only allow the amount of rent that was properly verified. In certain circumstances involving shared occupancy, we will allow an equal amount of the rent if there's no shared living expense schedule filled out. In other situations, the department may have to write to your client to get more information, and this also delays the refund. When property tax bills do not show on all required fields, we may have to write your client to get that information. In addition, when the addresses don't make sense or if there's no indication a move took place, we may have to write your client for more information. What's the solution? Well, first, make sure all rents or property taxes claimed have proper verification before the return is submitted. Double check that all signed rent certificates or rent verification is included with the return along with Form WRA. And double check the property tax bill as well to make sure all required information is shown on the bill. In addition, send notes or an explanation when needed to clarify any unusual situations. We'd rather review one extra page of documentation than have to write to your client. And the last type of common errors are issues with e-filed claims. The three most common issues with e-filed claims are: 1. The property tax or rent certificate information is incorrect or incomplete. We need all the information filled in on these electronic forms. Your software has lines for all required fields, so make sure to input the same data from the original document into the electronic version. 2. No Homestead Credit note is attached when one is needed. Most software programs have a Homestead Credit page for preparers to mark off certain situations that apply to your client's return. Use these notes when these situations apply. Also note there is a fill-in note area for you to put in other information that would explain certain situations not covered by the checkable notes. For example, if your client moved, you can list the addresses and time period they were at those addresses in this section. Another example is if your client had low income, you can explain how they paid their rent in this section. 3. The WR attachments are not mailed, electronically filed, or are in an improper format. Make sure Form WRA and all requirement documents are mailed or electronically filed as soon as you receive the acceptance of the Wisconsin income tax return or Schedule H submission. If electronically attaching documents to a return, make sure they're in a compatible file format before you send them. So why is this a problem? The department may have to write to your client to get the missing information, delaying their refund. This delay can be substantial, especially if we do not receive a Form WRA and the required documentation. The department may adjust your client's return or deny their refund. And if we adjust the return or deny the refund, your client will get a notice explaining why the refund is not the same amount they expected or was denied. What's the solution? Well, first, double check the claim before submitting it electronically. Next, send notes or explanations when needed, or when you think you may need clarification on something. Also, mail in Form WRA or electronically file them in a timely manner, or make sure you attach documents filed electronically in the proper format. The final common error we see are issues caused by complex special situations. They can be when spouses resided in separate homesteads, when a claimant was married or divorced during the year, and when a claimant or spouse goes into a nursing home during the year. To get answers for these special situations, read the special instructions section in the Homestead Credit instruction book. Also, Publication 127, Homestead Credit Situations and Solutions, covers other situations that are technical and will provide you with step-by-step instructions on what you should do to submit a correct claim. And last, Publication 109, Tax Information for Married Persons Filing Separate Returns and Persons Divorced, has additional information about the Homestead Credit in Part 4. Let's look at how your client can check on a refund. Instruct your clients to wait at least 12 weeks after filing before contacting the department about the status of a refund. If a claim is selected for a review, it takes longer than the normal turnaround time for a refund. Once that 12 weeks has passed, they can check the status of their refund on our website using our Where's My Refund tool. They can also contact us by phone at 608-266-8100 in Madison, 414-227-4907 in Milwaukee, or toll free at 866-947-7363. The information they get by phone is the same information they will get online by using Where's My Refund, which is a lot quicker and easier to use. When your client calls or checks online, make sure they have the amount of their refund and their Social Security number. In addition to checking the status of a refund, the department has many resources to help prepare a Homestead Credit claim. You can contact our Homestead Credit line at 608-266-8641. You can email the department at dorhomesteadcredit@wisconsin.gov. You can go to the Homestead Credit webpage on our website, revenue.wi.gov. Here you will also find links to the Volunteer Income Tax Assistance and Tax Counseling for Elderly program, Publication 127, Wisconsin Homestead Credit Situations and Solutions, Schedule H instruction booklet, and information on the review process and disagreeing with a notice.